Hey everybody, welcome to accountinglecture.com. Today we learn provision for doubtful debt. In our previous lectures we've learned recoverable debt and bad debt, and this lecture doubtful debt. Provision is kept based on past experiences that how much trade receivables are going bad, they're not paying us. So it's not an accurate amount, there is no certainty. We're just keeping a provision just to make sure that our prudence concept being applied, shown our current assets lower and our profit lower. Okay, so that's what we keep and do on our trade receivables. Starting with an example, number one, it says trade receivables during the year ended 31st March 2014 are 15,000. Calculate 3% doubtful debt. We have a doubt that altogether 15,000 is our trade receivable, but 3% will not pay us. From our previous experiences, the 3% we have ascertained. Just do the 3% and your answer, let me take the calculator. Yeah, it's 450. They will not pay us. Okay, now moving to the rules of your doubtful debt. How do you show into the financial statements? In the income statement, if there is an increase of doubtful debt, no good thing. It's an expense. But if there is a decrease in doubtful debt, oh good, we decrease in doubtful debt. Income. How do you know increase or decrease? You need to compare with last year's, previous year's doubtful debt. Sometimes it's given, sometimes it's not. If it's the very first year, there is none. So in this particular question, this is the first year, it's straight away increase. And they told you a bit more about the increase and decrease over here. Yes. Oops, a little bit of scratch. No matter. If there is an increase, debit into the income statement. This is an expense. And in a provision for doubtful debt account, it's a T account, it's a credit account. Provision for doubtful debt account. We'll be doing in this example. In this particular example, we'll cover all our doubtful debt solutions. And from the SOFP balance sheet, we used to call it, the whole figure is deducted. The doubt 3% or 5%, whole figure, no increase, decrease. Well, yes, if it is a decrease, a good thing, credit into the income statement and debit into the provision for doubtful debt. We will do examples on it. Let's start with example number 2. Easy example. Okay. Trade receivables for Tasnuva and Tabassum Company for the year ended 31st March 2016 are following. We have some receivables, 3. SH Mithu, Shekel, and Islam. Some figures are given. Okay, scrutinize the question a little more. It said Mr. Shekel failed in the business and become bankrupt. Oops, there is a problem. If it is a bankrupt, he can't pay. And said further, so he's unable to pay the due amount to the snuva. So immediately, Mr. Shekel's 7,000 become bad or irrecoverable. We can't recover. Okay, so okay, they said calculate 5% doubtful debt. We will do doubtful debt on our trade receivables. But the rule is, on what figure you do? We do trade receivables minus any bad debt. Whatever is remaining figure, on that you do the percentage. So here is your trade receivable figure. If you add these 3 is 22,000 and your irrecoverable bad debt is 7,000. So you'll be left with 15,000? Yes. That's your trade receivables figure. And we have a doubt that 5% will not pay of this 15,000. So times by 5%, answer is 750. That's your doubtful debt. So this is all of it increase. There's no information given regarding your doubtful debt before. All of it is your increase goes into the income statement as an expense, and from the balance sheet or statement of financial position, we deduct it from our trade receivables figure. Okay, you're meant to do ledger account for your bad debt or irrecoverable, and it's a debit account. So we know that shekel become bad debt. It's a bit of recap from previous chapter. I think 7,000, yes, is the figure. And that's it. There's no more bad debt or irrecoverable debt. This side is bigger debit side, you write on the other side credit side 7,000. Nothing to take away. All of it, we don't do balance CDBD, rather it goes into the income statement. So the balancing figure is income statement. They asked us how to show the doubtful debt. Bear in mind, it's a provision. All provisions are credit. This is a credit account. And that particular year end is important. This is 2016, 31st March. There is an increase for doubtful debt of 750 that goes straight to income statement as an expense. That's why on the credit side you do total, write the bigger side, both debit and credit. Any remaining balance is your balance CD. That becomes your balance BD. Okay, that's how you do. Okay, main example number 3. It will your doubtful debt or the T account over the 3 years time. All right, let's read the example number 3. It says the teachers decide to create a provision for doubtful debt 5% on its credit customer trade receivables figure given over the 3 years 2011, 12, 13. What percent? 5%. Let's do quick workings. 5% of 10,000 is 500, and 5% equals to 5% equals to 750. 5% you get 600. Okay, let's see how does it shows us the increase and decrease. 2010, no information given, so that means there was a 0 doubtful debt. From 0 to 500 there is a clear increase of 500, and compared to 2011 to 12, our doubtful debt is 750. So from 500 to 750 there is an increase of 250, and then 12 to 13, 750 to 600, there is a decrease of 150. Okay, these are our workings. All this information, the increase and decrease item goes into the income statement. Increase, expense. Increase, expense. Decrease, income. And we know income goes after gross profit. And these items here, trade receivables, and the whole figure of doubtful debt goes into the balance sheet or statement of financial position. Okay, requirements. Write the provision for doubtful debt account, it's a T account, show effects in income statement and balance sheet over the 3 years period. We already identified the effect of income statement and balance sheet. Let's do the T account. Yet again, it's a credit account. So anything makes it up on the credit side, makes it down on the debit side. Pound sign over the 3 years, 2011, 12, and 13, starting with 11. There is a clear increase of 500. That's what we're going to show in our income statement as an expense. That's why in the detail we're writing income statement. Nothing more to show 2011. That's your total 500. We'll write the bigger side, both sides 500. Nothing to take away. All of it becomes your balance CD for 2011. But 2012, it becomes your balance BD 500. Well, in 2012 we have a few more items. If you can see, there is an increase of 250 in our doubtful debt. We need to take into our T account. Anything increase in a credit account, it goes on the credit side. As the name of income statement, 250. Nothing to take or less in 2012. Yeah, it's 12, sorry. Yeah, it should be 12. 750 is the total. On the other side, all of it becomes your balance CD, 2012, year ended. That becomes your balance BD in 2013. 750, the figure. Okay, 2013, there is a decrease, if you can see, 150. And how did you know it's a decrease? From 750 to 600 is a clear decrease. So we'll take this figure 150. If it is a decrease and it's a credit account, it's on the debit side, making it lower. 100. Nothing to take. You do add up, check which side is bigger. Your credit side, 750. You write both sides. Take a 100. 600 is your remaining figure for 2013. That's your BEL CD. 2014, it becomes your BEL BD. 600. That's how you do your T account. Into the income statement, we did our workings. 2011, there's an increase of 500, so it's under less expenses of your income statement. You say increase in doubtful debt 500. So thus in 2012 there was an increase of 250 under less expenses. You write increase in doubtful debt 250. But 2013 there's a decrease of 150. It goes after gross profit, add income. You say decrease in doubtful debt 150. In your balance sheet or statement of financial position, we take away the whole figure from our trade receivables. It goes under current asset, trade receivables. 2011, we remember, is 10,000 minus 500. So 9,500 is the answer. Current asset. Every year is current assets. Trade receivable figure was, let's check for it, 15,000, yes. Minus how much? 750. Whole figure, no increase, decrease works here. It's straight for whatever is your doubt, you take it away. Prudence concept. 14250. And so thus last year, trade receivables was 12,000, yes. Minus 600, you get 11,400. That's it. Thanks for watching. Keep liking and keep commenting, keep sharing. Your success is our top priority. Goodbye.